We're seeing a bit of a relief rally in the euro against the US dollar over the past couple of days. This comes after a strong period of for the US dollar. The US dollar for the last month really has seen plenty of safe haven flows. The yields on offer from US Treasuries is certainly an attraction for investors as far as the safe havens are concerned, and we've seen strong support for the US dollar over the course of that period. But the dollar index running into resistance around that kind of 100 level has triggered a little bit of profit taking, it seems, and that's alleviated some of the pressure on the euro, on the single currency. Now we've found some support in euro dollar around that kind of 108 level. We've rebounded into the 108, 108.50 area, where again already we are starting to see signs that we could be seeing a little bit of rotation here. Now previously this was an area of support, so the fact that we're seeing some resistance here isn't necessarily too surprising. The next big level above here is 110. Now I wouldn't discount the possibility that we could see that, but I do think the dollar will continue to be well supported, even though we are seeing some profit taking at this moment in time because of its safe haven appeal. So this may just be some temporary weakness which we are seeing in the US dollar. So if that 108, 108.50, 109 level starts to hold and we start to see rotation, then I think that 108 could again come under some real pressure. And again below here you're looking at around the 107s, 106s for potential areas of support. 105 is, I think, a key level here to the downside. We're still a little bit away from that at this moment in time, but I think that's a real key level, 105 historically. Right now the 108, 108.50, 109 is the key area in terms of the potential rotation levels, the big resistance levels which were previously support, and then 110 above here. But this is all about risk at this moment in time. We are seeing obviously weakness in the euro as a result of some of the softness which we are seeing in the data. We could see more softness in the data as well over the course of the coming weeks as we start to see some coronavirus related data. Of course, many European economies are heavily exposed to China, Germany being the most notable of these, and the slowdown which we've seen in China is likely to have knock-on effects as a result, and could filter through to some of the data that we do get over the course of the coming weeks. But also now with cases having spread to Italy and having the potential to spread elsewhere, that can further weigh on some of the sentiment readings, which will again further you would expect weigh on the single currency should that of course materialise. But I think the key factor here is going to be that US dollar. It is going to be its safe haven appeal, and while we are seeing a little bit of softness in there at this moment in time, we are seeing a little bit of profit taking. The broader trend for the US dollar as far as risk is concerned is that does still have that safe haven appeal, and therefore once we've seen this profit taking play out, I wouldn't be surprised if we do see that kick in again, and that could be worrying as far as the euro is concerned. Again, 108 being a key level now to the downside, 107, 106, 105 below here.